From the beginning of time, man has always had a pursuit of the best quality of life possible. That quality of life is not possible without resources. The form of resources we have accumulated has changed over time from cowrie shells, state-controlled money, precious metals, real estate, and stocks and bonds. Over the past 100 years, the world has been dominated by the US dollar and its reserves. But everything that has a beginning also has an end. A new financial revolution is upon us with the emergence of a digital economy. The way we earn, spend, and accumulate resources is fundamentally changing. A new asset has appeared that the wealthy have overlooked. Bitcoin has become the best performing asset of the past decade by far. With only 21 million ever in existence, there are more millionaires and billionaires in the world today than there are Bitcoin. Just by holding 0.25 Bitcoin today will put you in the top 1% asset holders in the world in the next 5 to 10 years. If you had invested $100,000 in Bitcoin in 2013, today it will be worth more than $15 million. Bitcoin billionaire Raoul Pal says, Bitcoin's performance is so dominant and so all-encompassing that it is going to suck in every single asset narrative dry and spit it out. Never before in my career have I seen a trade so dominant that holding any other assets makes almost no sense. This is not an industry you can afford to ignore. If you want to remain in business, then you must adapt. Are you offering services in Bitcoin? Are you accepting payments with digital currencies? Have you adopted blockchain technology? Blockbuster Video at one point was the most dominant video service in the world. They had the opportunity to be part of Netflix, but they ignored the changing technology. Where is Blockbuster today? Where will you be tomorrow?
I want to ask a completely different question for you, Tom, because he's our overall ETF maven here. We have seen a spate of new Bitcoin ETF offerings recently, including from BlackRock. Even though everybody knows the SEC and Gary Gensler is completely hostile to the idea, and everybody said, well, they're going to say no to a Bitcoin ETF, just like they said no to everybody else. But I'm wondering why now? What does BlackRock think they're going to get out of this effort?
You can't get away from your favorite subject here, can you?
People ask me about it, and I don't have an easy answer for it. I always think I'm missing something here.
I think you're right. I think your sniffer
you think
usually
I'm missing
is
something?
No. I think you're onto something. I think your sniffer is always really pretty good, Bob. If BlackRock all of a sudden has filed for a Bitcoin ETF that's not futures based, it's spot Bitcoin,
right.
Okay? And Gensler said, no way, that's not going to happen. But at the same time, they're bringing together some pretty good partners from a custody standpoint. They've got Bank of New York Mellon. They've got Coinbase.
Right.
They've got an agreement, a surveillance agreement with NASDAQ to help with the security aspect of it. So they're trying to show the SEC that they're putting all the safety provisions in place to give them the confidence, to give them that acceptance of their application. I think the big thing we know is Gensler said, we're not going to do anything there unless we have the exchanges regulated, and Coinbase is not regulated.
But that's my question. Do you think this is going to change their mind? I can't without the clear regulatory authority, and they're not getting a bill through Congress. So now he's just resorted to essentially suing everybody. He's trying to regulate essentially by filing complaints.
Yeah.
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
You know, they're the behemoth, right? They're the.
That's why I'm thinking. I still don't quite get. Yeah. How are they going to change his mind?
I mean, if they can partner with Coinbase and say, look, you agree to get regulated, what would that do to your business? Imagine institutional investments, just 1% allocation to Coinbase, and what that would mean. We're talking about a lot of money.
Yeah.
So there are a lot of people like you that are saying, is this finally the time? Is it going to happen?
We're going to follow this very carefully, folks, because, again, they're not going to waste their time. Yeah. Trust me. BlackRock isn't, if they don't think they have some chance
Sure.
of doing something here.
And it is upon us. We are on the verge of the spot Bitcoin ETFs getting approved. BlackRock has met with the SEC like 6 times over the last couple of weeks. This is not a matter of if, it's a matter of when. Good morning, everybody. Welcome to Early Morning Crypto Talk. Bitcoin Brandt from Los Angeles, California. Go ahead and type your name in the chat box where you're listening in from. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, share information for educational, training, and entertainment purposes only. And it is up to you to make your own informed, intelligent decision on which direction you want to move into. So this is 2 days removed from Christmas. I see we have Mr. and Mrs. Albert on the line from Connecticut. Good morning. Good morning. I got a Facebook user saying good morning. Daryl from Texas. Good morning. Joyce Easley from South Carolina. See Gold Reserve Group from Toronto, Canada, on us through YouTube. We're streaming Facebook, YouTube, and Twitter. See, we have Neil Brooks. I see Kenny Taylor from Los Angeles, Ann Perez from Rochester, New York, Leonard Long from La Quinta. So welcome, everybody. We're not going to keep you long at all this morning. We understand this is Christmas weekend. Get you back to your families. I see Javier from Pigeon Forge, Tennessee, and Liz Wright from Virginia. George Lack from Washington State visiting our kids for Christmas. All right. So we are coming to the end of 2023 and the beginning of 2024. As I've always said, I believe that 2024 is going to be a transition year for a lot of people. In fact, I have an article coming up that is not going to paint a pretty picture of what the future is going to look like on the short term. We've got news. ILCA is on and popping if you're paying attention to my Facebook. We've got launching immediately will be 3 brand new courses: artificial intelligence, Web3, and tokenization. And before, you guys know, January also represents my 2-year anniversary with ILCA. And when I came out the gate with ILCA with just 6 courses, I charged $1,000. If you are already a member of my community, only $500. $1,000. Well, guess what I'm charging now for access to not only these 3 brand new courses, but the other 7 I already have, plus my inner circle, plus my diamond class. Do you know what I'm charging? $99 for January. That's it. $99. I could go and create a whole new company with just the 3 new courses I'm offering right now and charge $1,000 for it. $99. We'll have the sales page for that will be coming up next week to participate. And the reason why I'm doing that is not because I'm trying to, if I wanted to make a whole lot of money off of this, I would be charging a whole lot more. I understand that we are coming into a pivotal time in history, financial history, with the Bitcoin halving happening next year and what comes after that. And most people only have a short window of opportunity to participate. And I want to make sure that I can sleep good at night knowing that I at least did everything in my power to offer the knowledge and education to the most amount of people. I can lead you to water, but I can't make you drink it. So at least I know I will sleep good knowing that, Lord, I tried. I tried. So $99 is it. And that, I mean, if you, that's a Friday week. Last night I spent $82 on Wingstop. Just yesterday. Anyways, oh, wait a minute. I'm going to spend more money. Aquaman comes out today, huh? I got to see if my kids want to see that. That's going to cost me, if I take the family, what, $50, $60 just to the movies? Half the cost of Jordans, $99. Anyways, News on the Vara side that we will have more updates coming up as we get closer to the end of the year. I'm going to tell you right now what threw a monkey wrench in everything was our own lawyers. Compliance. Compliance said, hey, do you want to be here for 6 months or do you want to be here for 40 years? Well, you know, the obvious answer to that is so compliance went through everything with the fine tooth comb and said, yeah, you can do this, you can do this, you can't do this, you can't do this, you need to change this, you need to change this. So it set some things back. But we are in pre-launch, so that was expected. Are those new videos recorded? Yes. So Ann Perez asked a question. Are those new videos that I created recorded? Yes, that's the whole point. You have access to every recorded. I think when I'm finished with these, I think that brings the total to 150 something videos that you can go and watch whenever you want. But here's where the diamond class comes in. The diamond class means I'm going to be teaching live. What I found and what separates what I do from people, bro, why do I buy your videos? I'll just go to YouTube and look at videos. Yeah, but with YouTube, there's no interaction. You're not a part of a community. You can't ask questions. You're not getting me live. See, with me, you're getting me live and I update my content. Because with crypto, this industry changes so fast. So, and we've seen in my community that the people would rather listen to me live than watch the recorded videos because I'm giving, you know, just like I'm going to do in Crypto Talk right now. But yes, they're all recorded, so you can watch it at your own pace. Like I always tell the story about my cousin Marnita before she became my assistant. When she was all curious about crypto, I sent her 45 videos, Bitcoin 101, Advanced, How to Trade Bitcoin and Crypto, and I said, get back to me after you watch these videos. I thought it would take her about 4 months. She did it in a weekend. Came back to me on Monday and said, what's next? I said, what do you mean, what's next? I said, watch those videos. She said, yeah, I did. I said, what? She watched all the videos. So we're going to be doing some fun things. Also, those of you in the Diamond class, you know that we just finished our series on how to trade Bitcoin and cryptocurrency. So in the new year, I'm going to be doing some things. We're going to get down to day trading. But instead of me doing it in the Diamond class, it's only twice a week in the evening. We're going to incorporate it in our crypto talks in the morning because I'm going to get back to doing the 5-minute charts, the 15-minute charts, and the day-to-day. So we'll have our spreadsheet up. We'll have our exchange up. We'll be picking what tokens we want to trade on. We're going to be going through the strategies, and we're going to do that in the inner circle. So I'll open the inner circle with reading the charts like I'm about to do right now. We might read 1 or 2 articles. I mean, there's so many now, I can't even cover everything. We might read 1 or 2 articles, and then we'll jump into trading, or we'll do some trading first, and then I'll jump into maybe 1 or 2 articles. But we're getting up to the halving event. So that also means all of you, if you want to be in our inner circle, we do it Monday through Thursday. It's not open for the public. $99. And you're getting that inner circle as well as all my courses and Diamond class and 5-day challenge VIP. So you don't want to miss out on that. $99. Now in February, when February rolls around, you'll have a choice. You can choose to keep everything that I'm offering, or you might say, Brandon, I just want the inner circle, and that'll be $49 a month if you want the inner circle. All right. I see we've got Janelle hopped on in. Go see the color purple on Christmas Day. I've been hearing a whole lot about this. Oprah's all over the place. Color purple. This is a new rendition, right? Because I've seen the old one multiple times. See if my wife wants to see that. All right, so let's share screen and get into, see right here. There we go. All right, let's see what's happening in the crypto market today. Okay. Oh, this is Saturday, so we got to go week to week because all of you guys aren't always in my inner circle during the week. All right, so we've got crypto market cap is at 1.7 trillion. Bitcoin dominance is almost 50% of that. 49.3. That's come down. It was at 49.7 last time I looked. Ethereum's at 15.8. Let's look at the week to week. Bitcoin is up 3%. Ethereum 1.3. Whoa. BNB went up 9.5. Solana, with their announcement of some blockchain-based phone, which I still think is FOMO, they're up 25.2% on the week. Ripple slightly came down 1%. ADA came down slightly to 2.5%. Polkadot went up 7.4%. Tron went up 4%. Chainlink is up 8.4%. Shiba Inu is up 8.9%. Near Protocol went up 44.5%. Huh. Injective went up 22%. Let's look at the best tokens over the past week. Stacks, 45.4. Near Protocol, Optimism, Say, Tokenized Exchange. I've never heard of this one. Marinade Staked Soul. I've never heard of that. Anybody heard of that one? Marinade Staked Soul. Let's take a quick look. Who are you? Whoa. Next supply is only going to be 5 million. 5.9 million. It's on the Solana network. Figures. This isn't new. It's been out for a while. So this is some FOMO buying in here. Came out 12 months ago. It reached an all-time high of 3,000. Oh no. This is an old coin. 2 years ago, it reached $3,541 a coin. Huh. Let's dream mode this. I'm going to dream mode it at today's price. If this is able to survive, it will reach its all-time high again at least once. So if I took $1,000, right, at a, oops, 1,000. Oh, you guys can't see the calculator. I'm on StreamYard. All right, I'm doing $1,000 at 111.74 cents. That would give me 8.9 tokens. It goes back to its all-time high of 3,500 times 3,541.84. I flipped my 1,000 into $31,000. Where is this being sold? Radium, Orca, Coinbase Exchange, Kraken. Dang. I'd have to get it off of Coinbase. I'm going to put this one down here when I got some extra funds floating around. Today is the 23rd. I'm going to take a position. But this might be false hope, though, because it's only rising because Sol has been rising. MSOL, current price, $111.22. All-time high was 3,000. Overview. All-time high was 3,541 2 years ago. That might be one I have just to watch. Okay. And it got to the top 100. I'll put it on a watch list. All right. So there's that. That's a new one. Okay. Solana, obviously, 25%. Injective, 22%. ELF, 19%. ELF. There's another one I'm not familiar with. Just broke the top 100. Who are you? Ethereum token, 1 billion. Okay. Got 1 billion. Oh, this is an old coin. What's up with these old coins coming out? 6 years ago, it reached $2.60. Right now, it's at 96 cents. Not enough margin for me to want to get excited about. This is like a resurrection of a dead project. Where is this being sold? Binance, Business, should be everywhere. Phoenix, Bondgate, Uniswap's got it. Crypto.com's got it. A bit now, but this is not impressive enough for me to put on my radar screen, so I'm going to pass on that. Let's see. Arbitrum, Mina, PancakeSwap, Algorand, Phantom, Flow, VeChain, Sui, BitGet, BNB, Immutable X, Apto, Shiba Inu. Okay, this has been a healthy week in the crypto space. Worst performers. Bonk. We've been watching this one, and it's been on a steady decline. Bonk, 25.7%. BitTensor down 19%. Celestia is down. BitTorrent, Caspa. All of these tokens that they had 2 weeks ago, they had a wild ride, and now they're all coming down. Thorchain, Airweek, even Helium. Helium had a good bump. Now it's coming back down. Whoa. In the past hour, it's been up 5%. I don't know what's up with that. Beam even dropped 9.5. Clayton, Aave, Ordi. This is one to watch. Ordi is down 4.5. This is the number one BRC20 token right now. Conflux, Synthetics, Osmosis, IOTA. All right, so let's get into some of the news. First one up is one that just hit my desk that Stephen Parker shot over. China has quietly flipped on crypto. Did they really? See, ever since I came in crypto, back in 2017, do you know what country was the biggest Bitcoin mining country in the world? China. And then all of a sudden they banned Bitcoin mining. And then they introduced blockchain technology, and then they banned it. And then they wrote law that said every single government employee has to learn blockchain technology because they're getting ready for their own version of their CBDC. It was by law. If you work for their government, by law, you had to go through blockchain training. And then they banned some stuff again. And now, quietly flipped on crypto amid huge $1.6 trillion Bitcoin, Ethereum, and Ripple. So those three combined, well, and Solana is 1.6 trillion. Bitcoin alongside other major cryptocurrencies like, stop the way, Ethereum and Ripple and Solana have surged as traders brace for a massive Wall Street game changer. Now, why this is important? This is Forbes magazine, not a crypto website. This is Forbes. The Bitcoin price, which has more than doubled to $44,000 per Bitcoin over the last 12 months, has been left in the dust by Solana and some other smaller coins, with some expecting 2024 to bring even bigger moves. Now, amid wild rumors of a sovereign Bitcoin bid, China has said it will place great importance to the development of the crypto industry in the future. Despite a China Bitcoin and crypto trading ban that crashed the market in 2021. China has said it will place great importance to the development. So the same people who act like, they want to ban it are also talking about we're going to help the development of it. China is pushing ahead with this. Wait. So what's these headlines? Xi is in its aggressive attitude toward Bitcoin. Okay. $1 trillion will rip in. Huge 2024. Biden bailout predicted to crash the U.S. Why would there be a bailout and trigger Bitcoin and crypto price boom? I'll glance at that in a second. Forget the spot Bitcoin ETF. A huge unexpected bank flip could be about to hit the price of Bitcoin. Bank flip. Solana prices surge. Yeah. Okay. China is pushing ahead with its development of NFTs and blockchain-based decentralized applications, according to a document published by China's Ministry of Industry and Information Technology. Our ministry will strengthen collaborative interaction with relevant departments to promote Web3 technological innovation and high-quality industrial development. A government document translated with Google and dated August 4th, but only published this week, read, Web3, an idea that rose to prominence last year, describes a blockchain-based decentralized internet that could replace the Silicon Valley-centric Web 2.0 that's dominated by the likes of Google and Facebook's Meta. China's tech ministry plans to look at the metaverse. Oh, really? The metaverse. Wait, hold on 1 second. Do I have a... All right. Let me get rid of this person. There we go. Don't use my platform to try to promote your stuff. China's tech ministry plans to look at the metaverse, referring to a shared digital world that can include open world games and interactive spaces online and NFTs, and explore the implementation paths and applications of technologies such as decentralized identity management and virtual digital identity. Hold up. Virtual identity management. Where have I seen that? Let's see, decentralized. Yeah. Oh, yeah. Okay. I'm going to have to stop share for a second and then share again so you guys will be able to see. I'm not on Zoom. That's right. My sharing is a little bit different here. Yeah, I guess it'll show this. Look at this. AI-powered decentralized ID. That's one of my courses. AI-powered decentralized ID coming. But hold on, I got another one here. If I look at, not in tokenization, in Web3. Web3, where is it? Data privacy and ownership. There you go. Web 3.0 identity. I'm spot on. I told you guys I try to pick when I do new courses what's going to be relevant in the new year. What's going to be hot? What's going to be the flavor of the month or the flavor of the year? Forbes magazine just said it because of China. Decentralized identity management and virtual digital people. After China banned crypto trading and mining in 2021, the country has, oh yes, decentralized identity. And I got the courses on it. Let's see. After China banned crypto trading and mining in 2021, the country has continued its development of blockchain technology, mostly for government surveillance and identification purposes. The development of China's digital yuan, a so-called CBDC, and I'm going to be writing a course just on CBDC, that was partly inspired by Bitcoin and crypto, and has spurred other countries around the world to explore the development of their own CBDCs, including a digital dollar in the US, a digital euro in the EU, and the UK's digital pound. Yes, We were just discussing that in the inner circle. It pays to be in the inner circle. See from this. China's continued interest in Bitcoin's underlying blockchain technology comes as a combined Bitcoin, Ethereum, XRP, Solana, and crypto market nudges its year-to-date highs. Crypto's market cap duplicated its December peak on Wednesday evening, reaching $1.65 trillion, before marking a neat profit-taking following a similar move in stock indices. The propensity for profit-taking after a surprisingly strong rise in 2023 alternated with FOMO momentum. These factors are arguably the only market drivers right now without significant economic and market news. I agree. This is not a crypto run. It's just FOMO that's taking place. And I cannot predict what's going to happen when the Bitcoin ETFs for BlackRock are approved. I'd want to say that you're going to see the space explode, and it may explode only because of the hype, but I'm more inclined to think it's going to follow exactly what happened in 2017 when the futures came online, like the Chicago Mercantile Exchange and whatnot, and the CBOE. Everybody thought it was going to keep exploding higher. But the day it went live, the market dropped because the institutional investors manipulated the market. They were not going to buy Bitcoin on the high. They said, wow, if retail investors, and when you hear the word retail, that means poor people. When you hear the word institutional, that means wealthy people. So in their minds, retail investors got Bitcoin to $20,000. We ain't buying it at no 20,000. Let's manipulate it down and we'll buy the dip. I'm more inclined to think that is going to happen maybe a month or two after the spot Bitcoin ETFs go live. I think that will probably happen. And I still believe Bitcoin's got to drop around to the $15,000 range at least one more time. I could be wrong. And if I'm wrong, I'm wrong. But I still believe that, in my only opinion. You guys may have different opinions on that. But we're starting to see these countries. I saw another article, I think Janelle had published about Argentina. Argentina has now made crypto legal, or Bitcoin legal, tender. All right, then this other Forbes article, $1 trillion will rip in. Huge 2024 Biden bailout predicted to crash okay, when was the last bailout? It was during COVID. And we all had those stimulus checks. That's caused the high inflation we have right now. So what would cause Biden to do a bailout in 2024? That means our economy is going to have to do a huge tank. Something's going to happen, whether it be another pandemic and nobody can go to work. What will it be? See, Bitcoin and cryptocurrencies have surged this year as the Federal Reserve gears up to restart its money printer, with China also poised to flood the world with trillions. So China might have to print more money themselves. And since, the world economy is tied together, people think Biden's the reason for America, for our economy, where the entire globe, the United States, is actually responding better than every other country out there. It's not just a one country thing. This is a global thing. So if China does something crazy, we're going to be impacted by this also. The Bitcoin price has more than doubled over the last 12 months, sparking wild rumors of a secret sovereign Bitcoin bid. What does that mean? That means that they believe that some of the wealthy and some of the governments are behind the scenes gobbling up as much Bitcoin as they can. Now, after BlackRock quietly opened up the door to a $1 trillion plus Wall Street game changer, a predicted 2024 Federal Reserve bailout? What? So the last government bailout like that before the COVID was 2009, when the banks messed up and we had businesses too big to fail and the government bailed them out. You mean to tell me that they're talking about the U.S. government bailing out the Federal Reserve? What, our taxpayer money? That you guys understand, this $100 is given to us by the Federal Reserve that was supposed to be backed by gold. They took it off the gold standard in 1971 and left us with this toilet paper. Trust. So not only did they take our gold and give us this, now they're saying they want us to use our money, which is this, to bail them out when they're supposedly are the ones holding our gold. Somebody please make that make sense to me. This is highway robbery. That's all that. Well, the Fed is preparing a Biden bailout. David Sachs, a technology investor, posted to X. It has revised down inflation projections for 2023 and 2024 and is signaling upcoming rate cuts. So speaking on the All In podcast, Sachs added that he thinks there will be a rate cut in the first quarter of 2024. And if the Fed cuts rates in the first quarter, that makes everyone feel really flush. It takes about 6 months to work its way into the system, but that's going to give a big boost to the Biden campaign. Really? So will Biden try to pull something like this so that he'll look good for the election in November? Here's the problem. It doesn't matter what Biden does. Those who don't like him will never give him credit for anything that's positive in the economy. In fact, they'll say the opposite. I mean, stock market could go to 50,000 and Fox News and Hannity and everybody else will come out and say Biden's running our economy into the ground. Doesn't matter what he does. So we've got to, if I was in the Biden administration, I got to think smart about this. Because if you do this, it's not going to improve your numbers, but it will hurt the economy. The COVID stimulus checks, it made people feel good for like a weekend after they went to Walmart and bought their big screen TVs. And then they started crying that the gas prices went up and food at the grocery stores went up. That's what they're going to remember. Nobody remembers that they got extra money from stimulus checks. All they know is that everything is more expensive today. If what I'm saying makes sense, type me in the chat box. I got to make sure we're connecting here, that my wavelength is getting out to you guys. You guys understand what I'm saying. Because I have a degree in psychology as well, and I know how people think. Humans can be predictable and unpredictable, but really predictable. Fellow investor and podcast Bestie, speaking alongside Sachs, said, if you see a quarter point rate cut in first quarter, $1 trillion of the $5.7 trillion money market accounts will rip into the market. It's going to unlock a lot of capital. U.S. inflation has plummeted. Now, think about this, okay? Because there's people on here who like Biden. There's people listening to me who don't like Biden. Here's a fact. U.S. inflation has plummeted from a peak of just over 9% to 3.2% over the last year. So those who don't like Biden, do you think they're going to give him credit for that? No. Fox News won't even mention that. Instead, we need to impeach Biden because of his son, is the talking point. The economy has so far avoided recession. Now, I don't agree with that. I think we're already in a recession. People just haven't realized it yet. So the economy has so far avoided recession, though many are seeing recession signals flash, something that would likely damage President Biden's already spiraling poll numbers, heading into an expected rematch of 2020's White House battle with former President Donald Trump. Okay, if something crazy happens next year and all of a sudden there's a bailout and a flood of new money. Now, as a disclaimer, I'm not a licensed financial advisor, but as a suggestion, what I would do, instead of going to buy that big screen TV, I would buy crypto. I would buy Bitcoin and Ethereum, and then let that money work for you later in 2025. Let it flip. The economy has so far avoided recession. Let's see. This week, Federal Reserve Chair Jerome Powell triggered a stock and crypto market surge when he struck a dovish tone following the Fed's latest interest rate decision. And what does that mean? That meant that the stock market reached its all-time high ever. 37,000 points ever. It has never in American history been that high. Again, do you think they gave Biden credit for that? No, because at the same time as that was happening, Fox News and the critics were saying the opposite. So he should not do something that may look good on the short term, but it's going to hurt everybody on the long term. Declaring victory would be premature, Powell said during a press conference. But of course, the question is, when will it become appropriate to begin dialing back? I'm looking at this. Treasury Secretary Janet Yellen is hard at work pumping U.S. dollar liquidity into the financial markets. Bitcoin and crypto investor Arthur Hayes, the former chief executive of crypto derivatives pioneer BitMEX, posted BitMEX. Why is that on my mind again? That BitMEX came across my desk recently. BitMEX posted to X predicting the Bitcoin price will surge to $1 million. Yeah, but when? When do you think that will happen? I believe Bitcoin will reach $1 million eventually, but my timetable is not this Bitcoin halving, but I'm looking more at, oh, wait a minute. I only share that with our inner circle. I can't say nothing. I'll share it on the next inner circle call. You guys can remind me. Say, Brandon, when do you believe Bitcoin will reach $1 million a coin? I have a date, in my own opinion, but I'm only sharing that with our inner circle. So you want to be in the inner circle. So this week, Yellen predicted inflation would fall sharply in 2024, coming back in line with the Fed's 2% target and bringing interest rates back down with it. As inflation moves down, in a way, it's natural that interest rates come down somewhat because real interest rates would otherwise increase, which would tend to tighten financial conditions. Okay. Coinbase CEO highlights crypto's impact on economic freedom, calls crypto the future of money. The future of money. Coinbase CEO, the CEO of cryptocurrency exchange Coinbase, Brian Armstrong, published a blog post titled "The Future of Money is Here," and it's crypto on the company's website Tuesday. He did. I never really even go to Coinbase, but I just want to see. So they've got a news section, I guess. Coinbase. Why do I have $1,000 in here? What am I holding on to? Did I? Oh, in Inner Circle back in the day, I bought Deso. You guys remember that? And I've been sitting on it. Ah, I forgot about this. Okay. So, Deso, you know what I'll do? When we do our inner circle crypto talk trading, I'll use this money. I never come out of the pocket. I'll use the decentralized. That's why I bought that. I should have bought more. It's a decentralized social token. Huh? Maybe I won't. Maybe I'm not gonna. I'm not gonna use this. I'm just gonna keep sitting on that. In fact, I might add to it. I might add to that. Anyways, what's their news? Their news site. How did any of you guys also buy Deso? You guys remember? Is that the last time I think we did an example? What would have happened if they would have put this? Yeah, it was. Well, Michael, Trump just said that the stock market is doing well because people think. Oh, you can't make this stuff up. I swear, you can't. The current president of the United States gets no credit. Instead, it's the thought that somebody else might win is the reason why the stock market is up. And you know what? People are going to believe that. Oh my gosh. All right, let me not get started. Let me not get started. So where I was looking for the news. Where's the news on this? Yeah, you guys going to want to be in the inner circle. We're going to be doing day trading on this. And you know what? Well, I will start. Maybe I'll start with $50 and show you guys how to flip $50 into 1,000 real fast. Would you like me doing that in the inner circle? Start with $50 and we do some trades. Maybe I'll take that up on it as a task. I got a whole lot going on here. So I gotta make sure I'm in a, so might not have to start at the beginning of January, maybe the second or third week in January. We'll start that. If I start $50 and see if we can flip that. Okay. Maybe I'll sell at least $100 worth of Deso and use something like that. All right. I wanted to see the, okay. Solana nears $100. Mobile. What are the top AI power cryptos to watch out for? Here, how Larry think. Now, I don't read any news. Well, it's not just from Coinbase. They're pulling it from different places. CoinDesk. Okay. How Larry Fink, Kathy Wood, and the rest of Wall Street are cornering Bitcoin. Yeah. Well, we're gonna have to look at that one. Solana reaches another high. Bullish case for Ethereum. Bitcoin ETFs are coming to town. SEC reportedly tells spot Bitcoin ETFs. Solana. I don't see it. I don't want to keep digging for that. But so he's talking about this is the future of money. He explained that after a massive market correction, crypto has witnessed a 90% increase in value this year, accompanied by a 60% surge in volume during the fourth quarter. He noted that currently 425 million people globally own crypto, and 83% of G20 countries and major financial hubs have either implemented or are in the process of establishing regulations to provide certainty for the industry. With that kind of scale and momentum, innovation builds on itself. Crypto isn't just here to stay. It's the future of money. The industry has turned the page on the unlawful behavior that distracted from its progress. Oh, he's taking a shot at the SEC. Compliant growth is in. The Coinbase boss further shared that consumers increasingly desire faster, more accessible, and autonomous money movement, challenging traditional financial institutions. They also want to move it cheaply, without powerful institutions gating their access and charging high fees and interest rates. Today in the US, half or more of key consumers and voters are actively seeking alternatives to the current system. Crypto is helping to create a more open, more global system. SEC approval of spot Bitcoin ETFs could spur new growth for crypto as an asset class. But as use of crypto has grown, so has its utility, from an asset class to driving needed updates to the century-old financial system. Armstrong emphasized around the world, more than 100,000 merchants and payment rails themselves take payment in crypto, including PayPal and Visa. Among the reasons why, lower fees, higher speed, and access to new customers. Moreover, he pointed out that last year, global on-chain stablecoin transfers approached $9 trillion, more than MasterCard, American Express, and Discover combined. Noting that stablecoins help currencies like the US dollar exist in digital form. The Coinbase CEO further detailed, countries with low economic freedom, such as Argentina, Brazil, and Nigeria, have among the highest usage rates of crypto payments and adoption as a share of wealth. Wait a minute, didn't gold reserve just say something about Nigeria? Nigeria's central bank just reversed its previous ban on crypto trading. I said that was stupid for them to do from the get-go, that they should be adopting this. They want to protect the Naira. So about 1 in 9 people globally depend on them. Crypto transfers on average are 96% cheaper than other transfers that take 10 minutes compared to up to 10 days. Well, with what we're doing with Vara, how about that taking place within milliseconds? Not 10 minutes, but milliseconds. Armstrong stressed, global financial centers like London, Switzerland, Hong Kong, and Singapore are transforming themselves into crypto hubs to claim the jobs and talent that a more open, more global system will bring, concluding, crypto gives people economic freedom, ensuring access to their own money and fair participation in the economy, ungated by powerful legacy institutions, enabling people to build, create, and own their work. This is my quote for the day. Then I want to get to this one real quick. How Larry Fink, Cathie Wood, and the rest of Wall Street are cornering Bitcoin. On June 15th, everything changed in crypto. That was the day BlackRock, the world's largest investment firm, with $9 trillion in assets under management, applied to U.S. regulators for approval to sell a spot price exchange-traded fund for Bitcoin. For those of you who come early, if you haven't realized it yet, when I say I go live at the top of an hour, I actually go live about 10 minutes before. And I play videos. So next time you guys might want to get in here a little bit early, but I played a video about BlackRock. So it says they've got $9 trillion in assets. With the move, BlackRock sought to do what crypto players such as the Winklevoss twins and Grayscale could not: offer retail investors an investment product that was affordable to buy and easy to use. That's not true. It's more like they're doing this for their institutional investors first. For the last decade, the SEC, citing the need to protect investors from fraud and market manipulation, had rejected every petition for such an offering. But BlackRock, which filed its application under the auspices of its iShares unit, usually gets its way. If they do something, it's going to happen. As a powerful steward of the trillions of dollars Americans put to work in the markets, BlackRock has a 99% success rate. So do you think Gary Gensler, Mr. Burns, is going to get in the way of BlackRock? This is a done deal. The move couldn't have been more welcome from investors eager to shake off a punishing bear market. Bitcoin jumped almost 20% over the next 7 days and gained even more mojo in the fourth quarter to go up 164% on the year. Bitcoin's market cap has snapped back to $856 billion, around the same level it was before the Terra blockchain network crashed in May 2022. Now investors are counting the days before a Bitcoin ETF hits the market. On December 19th, BlackRock satisfied a key demand from the SEC and agreed to offer cash redemptions to investors from its fund. To be sure, Bitcoin was already rallying in the first quarter as iShares prepared its application. They weren't the only providers with designs on the sector. Soon enough, Fidelity Investments, Franklin Templeton, and Wisdom Tree were just a few of the dozen or so firms that applied for their own Bitcoin ETFs. And they only did it because BlackRock did. So when I say Larry Fink is directly and indirectly responsible for $15 trillion, if he only directly impacts 10 trillion, the other firms are going to copy them. Because if they don't, they'll be out of business. It's a domino effect. So even businesses that say, I don't know about that Bitcoin and crypto stuff. If you want to remain in business, you better get on board. Look at Blockbuster Video. People love walking into Blockbuster and walking up and down the aisles and picking their favorite movie, getting their popcorn and Twizzlers and taking their movie home. That's the future. Netflix said, nah, the future is people don't want to even have to leave their house. Their movie will come to them. That was the future. And Blockbuster had the opportunity to get in on it, and they turned it down. Most Fortune 500 companies are aware of that. They know the story, and they're not going to let it happen to them. So whether they like it or not, this is what I'm telling you guys. If you ever get into this situation where you've got crypto critics, like my CMO James Hendricks wants to do a whole series about how to answer the critics. I personally pay no attention, and it's a waste of my time. But if you want to, there's a couple things that all you have to say is BlackRock's getting in on it. The IRS is taxing it. Really, those two things. BlackRock is getting in on it, and the IRS is taxing it. Jamie Dimon had called Bitcoin a hyped up fraud, and Charlie Munger said crypto investors were idiots. Charlie Munger passed away, 99 years old. He called it rat poison squared. At the same time, Citadel Securities and Charles Schwab joined Fidelity in launching a crypto exchange. JP Morgan Chase and Apollo Global Management continued to hire staff and invest millions in using blockchain technology. Didn't Jamie Dimon just say a couple of years ago, I will fire anybody who works for me that's dealing with crypto? Yet, they're hiring staff to invest millions in using blockchain technology. What was going on? Wasn't crypto supposed to be dead after Sam Bankman-Fried destroyed FTX? And a flurry of crimes and regulators warned investors the market was rife with fraud? Fink & Company decided that a crypto winter was the ideal moment to capture a big chunk of an asset class, because here's why they had to do it. They said, we need to buy this now. But if we start buying it now, it's going to be public what we're doing. So let's pull the trigger. I didn't want to do it, but I'm going to play the video. Listen to Larry Fink at the beginning and then at the end.
Is it true that you're building out a cryptocurrency capability?
No. I mean, we're looking at it. We're looking at blockchain technologies, and we're looking at all the
But blockchain isn't crypto. Blockchain is just the underlying technology. Well, don't your clients want crypto exposure?
No. I don't believe any client has sought out crypto exposure.
Really?
Yes.
But at some point they might. Do you need to be prepared?
I don't, at the moment, no. I have not heard from any one client they're looking to buy a cryptocurrency at this time. But right now, I can tell you it worldwide, I have not heard from one client who said, I need to be in this.
BlackRock, the most powerful asset manager in the world with a $10 trillion portfolio, is investing in cryptocurrency.
This is not going to be an easy task. Capital is moving, and it's going to move very rapidly. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement.
Do not be fooled. Don't let Larry Fink's friends go on TV and convince you not to buy this time around. While Hillary and friends continue to sow fear, uncertainty, and doubt about crypto into the minds of the general public, BlackRock has been forced to disclose that they're into it.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, well, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. I mean, the transformation, think about instantaneous settlement, bonds and stock, no middlemen. We're going to bring down fees even more dramatically. As for me, I don't have to vote on any shares anymore because the beneficial owner will do all the voting.
And by the way, this isn't the first time he's said this. Larry Fink has been getting more and more vocal on this.
This is one of the reasons why I'm focusing on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds, that every stock and every bond we could identify immediately who is the beneficial owner. And this is why we're working on it. And every beneficial owner, from an individual to an institution, have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort. Oh, I actually believe most of the companies are not going to be around. I still believe that. I do believe
because they're now real, they're frauds, they're what?
Well, I mean, think about FTX. I mean, you could look back now. FTX created its failure was it's creating its own token. It was not a DeFi. It wasn't a ledger that was open to the world. It was a closed ledger.
Right.
It was not distributed. So the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system.
That is a gentleman that speaks with body language more than his mouth. And if you're able to read body language, you can tell the truth of what he's doing. He's so freaking excited right now. And he already said it. They're leading the way. Leading the way. This is a long one. I don't want to keep going through all of this, but let me get to, there's a clear sign Grayscale is preparing for an epic marketing war. Expectations are high that BlackRock and its rivals will indeed win approval from the SEC. The agency's chair, Gary Gensler, has taken a hard line on the industry, but when it comes to Bitcoin, it's become the exception rather than the rule. In other words, he's saying that every token out there is a security except Bitcoin, which is why I'm on the Vara project, because their whole focus is on the Bitcoin protocol. To be able to do everything you were doing on the other tokens, you can do on the Bitcoin protocol. It's Ethereum staking, Ethereum staking, stable coins, and other altcoins that have become the target of SEC. Unlike altcoins and stable coins, there is no single issuer for Bitcoin. Largely managed by a blockchain network set in motion in 2009 by the mysterious Satoshi Nakamoto, Bitcoin is an asset on autopilot. Even its scarcity is pre-programmed. So who's hawking? There's a 90% chance the SEC will approve a Bitcoin ETF by January 10th. 90% chance. And if and when this happens, you can bet there's going to be a lot of jostling among the 13 prospective issuers to attract investors. There will be marketing campaigns, online advertising, and maybe even commercials during the Super Bowl. Only this time, it'll be stalwarts of the financial establishment hawking crypto and not Bankman-Fried and his celebrity pals. Grayscale recently hired John Hoffman, the former head of ETFs for the Americas at Invesco, to lead its distribution. This is a sign the firm is preparing for what Balchunas called an epic marketing war. And even though the anticipation for an ETF has probably been backed or baked into Bitcoin's current price, it's safe to say a new chapter will open for the $1.7 trillion crypto market. With Wall Street's embrace, Bitcoin will have truly gone mainstream. I like that article. I'm going to save that for later. But now for some bad news. And then I got to end on this. Economist Harry Dent's grim prediction: 2024 market crash to eclipse Great Depression. What? None of us lived through the Great Depression. My grandmother would have been 100 years old this month. She passed away 2 years ago. She lived through it, but none of us lived through the Great Depression. In a recent interview with Fox News, renowned economist Harry Dent issued a dire prediction for the global economy, forecasting 2024 to be the year of the most significant financial crash in living memory. So I got to ask you guys a question, and you answer it to yourself. Are you prepared? If you're not prepared, are you making moves in the right direction to be prepared? See, what I've learned in my journey as a entrepreneur is that we always got to have the goal in mind. But what we can't predict is the path to get us to where we need to be. There's always going to be obstacles and things in the place. What matters is that you keep moving forward in that direction. So if you're not where you want to be, the question is, are you moving in that direction? Are you able to see the light at the end of the tunnel? Do you even know that there's a light at the end of the tunnel? When I was working a 9-to-5 job, I remember I had a come to Jesus moment with myself and if I kept doing this way, where would I be in the next 40 years? There was no light at the end of the tunnel. So we know this is coming. Citing a combination of overvalued markets, excessive stimulus spending, and artificial inflation of asset prices, Dent's analysis paints a grim picture of the near future. Not way down the road. With his reputation for contrarian yet often accurate forecasts, Dent's warnings carry weight in financial circles. Now, in inner circle talk, we talked about Robert Kiyosaki's predictions, right? Let's see what this guy says. Harry Dent, known for his unconventional yet insightful market analysis, told Fox News that the current economic situation is 100% artificial. Now, I got to see if politics is being played in here because he's speaking to Fox. We're going into a presidential election. So they got to make it seem doom and gloom for Biden, that we need a savior to come and fix Biden's mess. So I want to see if he's going down that road or he actually has something that we can pick up on here. So I'm gonna do my own analysis on this. So our economic situation is 100% artificial, partially true. Partially true, depending on, do you believe that COVID was an accident or was planned or allowed to happen? So we printed unprecedented levels of money printing and deficit spending amounting to 27 trillion over 15 years. And that spans multiple presidents, meaning Democrats and Republicans. This artificial inflation of the economy, according to Dent, sets the stage for a dangerous and inevitable downturn. Amidst this backdrop, The U.S. economy in late 2023 displays a juxtaposition of growth and uncertainty. Yet looming concerns persist as employment rates may rise due to the Federal Reserve's persistent interest rate hikes. This economic landscape sets a complex stage for 2024, with expert forecasts ranging from continued expansion to potential recession. Okay, here's one thing. And again, this is my opinion and my suggestion. What's inevitable is that pain is coming. We still are in the power to decide how bad that pain is going to be. Our government is acting as if we can avoid the pain entirely. And that is not possible. So when you're in a situation like this, then you need to decide, do we take the pain today? Or do we take the pain tomorrow? Irresponsible, let's say, let's keep kicking the can down the curb. So our children and grandchildren are the ones that's going to take the pain. If we take the pain now, then we will be able to recover for the long term. But if we continue to prolong this, when the pain does come, there is no recovery. That's the end. It's game over. I still think that we can recover from our $27 trillion in debt right now, if we take the pain right now. And it won't be pretty. It'll be hard. It might last 7 to 10 years. But we need to have a clean slate to so that we can survive the rest of this century as a country. But that's my own opinion. What is this? Coinbase expands European footprint with approval to operate in France. Oh, isn't that interesting? That's why we have Society General. All right, let's keep going here. Looming concerns persist as unemployment rates may rise due to the Federal Reserve's persistent interest rate hikes. This economic landscape sets a complex stage for 2024, with expert forecasts ranging from continued expansion to potential recession. The yield curve spread between 10-year and 3-month Treasury rates suggests a 61% chance of a recession within the next year. The core of Dent's argument revolves around what he terms the everything bubble, a phenomenon he asserts began in late 2021 post-COVID pandemic. Unlike previous market bubbles, which were typically confined to certain sectors, Dent believes this bubble encompasses nearly all asset classes, making its potential burst far more devastating. Dent's analysis points to the real estate and stock markets as prime examples of this overvaluation. He warns against complacency, advising that the impending crash will not be a mere correction, but a catastrophic fall, mirroring the Great Depression levels. I agree with that statement. He predicts an 86% crash in the S&P and a 92% crash in the NASDAQ. Dang. Can we even recover from that? A 92% crash with even greater losses in the crypto economy. Now that is true, because I told you guys the crypto storm is going to come. If the stock market and the financial market crashes, crypto does with it, but crypto recovers much faster. Because on the way down, people are selling in their traditionals, and they're trying to put their money in a safe place. They're not going to trust the banks. It's going to be precious metals, gold, silver, and crypto. This is going to hurt the rich a lot more than the average person short term. Because what the rich are going to do is they're going to close their businesses down, which means a lot more unemployment. The average, oh yeah, there we go. The average person is going to lose their jobs for 6 months to 2 years. The average rich person is going to lose 50 to 80% of their lifetime accumulated net worth. Can you imagine that? The rich, they lose 80% of their net worth. They're going to see the biggest come down to reality. And then the next stage of the boom is the millennial boom, which will not be as long as the baby boom, but it'll go into 2037 before we slow down again. Okay. So I'm 47 years old. All right, let me I want to do some math here. So they're talking over the next 13 years. So by the time I'm 60, dang, I'm going to be 60 in 13 years? Oh, that just hurt. I'm going to be 60 in 13 years? God, dog. Anyways, so we'll have a 13-year boom run. Dang, that just hit me. Okay. That boom will be less rich get richer. It will be more the middle class catching up again. So now's our time. The middle class will be able to finally catch up. I told you guys, the rich people get into crypto to stay wealthy. Everybody else is getting into crypto to get rich. Challenging the optimistic outlook of many investors and analysts. Dent criticizes the recent market rally, including the Dow Jones Industrial Average's record highs. And you're going to be 60 in 37 days. There you go. He views these as temporary and misleading, encouraging investors to get out of the way of the impending financial storm. The Federal Reserve's recent hints at ending its campaign against inflation and the possibility of rate cuts, according to Dent, will not prevent the looming crisis. He argues that the central bank's efforts are too little too late, predicting a shift from disinflation to deflation, a scenario not seen since the 1930s. Michael, ain't nothing wrong with being in your 60s. Yeah, but Michael, you look like you're 35, though. Dent continued, if I'm right, it is going to be the biggest crash of our lifetime, most of it happening in 2024. The biggest crash of our lifetime, most of it happening in 2024. A significant concern raised by Dent is the potential for a protracted economic slowdown following the burst of the everything bubble. He cautions that this could last for 12 to 14 years, exacerbating the wealth gap in America. Dent concludes with a somewhat optimistic note for the long term, predicting a recovery led by the millennial generation. Wait, what? Well, you're just going to skip over Gen X? Well, yeah, there's more millennials than there are Gen X. Gen X, we were that generation that if you're still alive today, God bless you, we survived. But then we coddled these little millennials. The Economist forecasts a new boom period, less characterized by the rich getting richer, but more by the middle class regaining ground. This new phase, according to Dent, could extend until around 2037, offering a glimmer of hope after a period of intense economic turmoil. Whoo! Yeah, I don't know. All I know is we need to be doing things today to prepare for what's coming. So the question is, are you guys prepared? And if you don't even know where to begin or where to start, that is where ILCA comes in. And unlike 2 years ago, when I launched and I charged $1,000 to be in this community for our 2-year anniversary, It's only going to cost $99. And this is going to be a clean slate. That means everybody will have to pay at least $99 for January. February, you'll have a choice. You can come down to $49 or $99 or $199, whatever you choose. But I've got a whole lot of new content coming out. Can you post that URL, please? Where's that? What article was it? Was it the Larry Fink one? No. Oh, Economist. Harry Dent. All right. I'll post that right here. There you go. All right, everybody. That is it for Crypto Talk for today. I won't be doing anything. I might do a broadcast later tonight or tomorrow promoting ILCA for the new year. But I hope you guys have a great Christmas. Come Tuesday, like I said, I got a lot going on here. So can I commit to Crypto Talk? Yes. Yes. I will be doing Crypto Talk next week. Not on Monday, but Tuesday, Wednesday, and Thursday. I'll be doing Crypto Talk in the morning. And we're getting ready for next year. So with that, take care, everybody. Enjoy the rest of your holiday. Merry Christmas to all of you if I don't speak to you again. And I will see you on Tuesday. Bitcoin Brandon out. Bye-bye.